The S&P is down 2.64% on the day today following Jerome Powell that just dropped the ball. This was in fact the worst conference from Jerome Powell I think we've seen since at least 2022. The Fed just all of a sudden brought up concerns about inflation, about tariffs, and the markets are even saying we're not going to get any more rate cuts, and we could actually get a rate hike from the Fed if inflation comes in higher than expected. With this backdrop, unfortunately, the Christmas rally most likely is canceled. We'll discuss that further into this video, but let's start here with the dot plot, because the dot plot was actually pretty much as the markets were expecting. So the real hawkishness from today and from Powell did not come from the summary of economic projections. It came from the Fed conference. Today is the summary of economic projections from the Federal Reserve. These are estimates for inflation, GDP, unemployment, again, PCE, and the federal funds rate, as well as a neutral rate longer term run projection. Now, this is going to be critically important for Tesla and the market. So first and foremost, let's take a look at what changed on the summary of economic projections as quickly as possible, because we have a lot of other information to get to. We had a lot of big news today for Tesla, and we need to talk about what this means coming next for Tesla stock and really the broader markets. Now, first and foremost, change in real GDP from the September projection was 2%. It got revised up to 2.1% for 2025. 2026 remained unchanged at 2%. So slightly higher GDP is expected. Unemployment rate was actually projected to be a little bit lower in 2025, from 4.4% in the summary of economic projections in September down to 4.3%. 2026 remains at 4.3%, unchanged from that September SEP. Inflation was revised quite a bit higher. The September SEP was 2.1% by the end of 2025, and now it's at 2.5% for the end of 2025. So that is up 0.4%. That is a little bit of an issue. Now, it's kind of in line with what the markets are expecting, so it's not like dramatically new information, but still not great. For 2026, estimates were revised up a little bit from 2% up to 2.1%. So slightly hotter inflation, unemployment rate that's a little bit lower, and GDP that's a little bit higher. Overall, that's kind of a no landing scenario projection from the Fed. Now, you have the federal funds rate projection in September was 3.4% by the end of 2025. Today, that comes in at 3.9%. So what this is saying, since the Fed cut rates today and rates are 4.5% now, that is saying that between 2 and 3 rate cuts are expected next year. That is in line with what the markets were already expecting. Okay, so this was not, more hawkish from that standpoint. Okay, this was in line with markets' expectations. Now, 2026 was revised up quite a bit, though, from 2.9% for the September projection, and this is, again, by the end of 2026, up to 3.4%, which would only imply 1, maybe 2 rate cuts in 2026. Also, the longer-term neutral rate was projected higher from 2.9% in September up to 3%. Okay, we have a problem. It looks like Jerome Powell has most likely canceled the Santa Claus rally. This is by far the worst Powell you have seen in really a couple of years. And I'm going to share with you some of these quotes, but the bottom line here is markets are drawing the conclusion that this was the last rate cut for a while. Even though, as I just mentioned, the summary of economic projections is pricing in about 2 rate cuts next year, Wall Street is saying, that doesn't sound like what you're saying. Okay, so that's one issue. The other issue is the unemployment rate is back to where it was in the summertime, but yet the Fed sounds like they're super bullish on the economy, super bullish on growth, and not cutting as much now raises the probabilities of a larger slowdown later on. It's kind of like a preventative measure. Like if you exercise every day or a couple times a week, you're less likely to, have certain medical conditions, okay? Kind of like that same analogy, okay? So the Fed is sending a strong message that they're pretty damn close to neutral, okay? So let's take a look at some of these quotes that, they're problematic, okay? They just really are. The Fed, it says 4 officials penciled in 25 basis points or less of cuts for 2025. So yes, the kind of median projection is 2 cuts next year, but some Fed officials penciled in just 1 cut or no cuts next year. So that's a problem. Fed Powell says also driving slower rate cutting path is higher inflation this year and next year. So they're projecting higher inflation. Now, the big issue, I think, also from the market's perspective is the Fed is taking into account potential tariff policies and what kind of inflationary pressures that can have. That's like literally what Powell said today, and we'll get to that quote in just a second. Jerome Powell says what's driving slower rate cut path is stronger economic growth and lower unemployment. Again, we're back to the same unemployment level we were in the summertime when everyone was saying, oh yeah, Powell should have cut in July, right? Remember that argument that people were like, okay, Powell's late. Everyone thought the Fed was late and we were possibly heading into a recession. Well, that was when the unemployment rate was pretty much where it is today. It's kind of weird. Okay. Powell says we believe policy is still meaningfully restrictive. Powell says risks and uncertainty around inflation we see as higher. So they're saying the projection, well, that may come true, but we think there's a greater chance that inflation actually comes in higher than what we expect versus lower than we expect. And that was also kind of a dagger to the markets. Jerome Powell says the extent and timing language shows we are at or near the point of slowing rate cuts. Jerome Powell says, I expect another very good year next year. He says the labor market is not cooling in a way that raises concern. And he says it might take another year or two from here to get to 2%. Powell says there's no reason to think a downturn is any more likely than usual. And he says core inflation coming down to 2.5% next year, as in projections, would be significant progress. He says the committee is discussing ways in which tariffs can drive inflation. We've done a good bit of work on that. So it looks like some of the expected tariff policies are actually influencing the Fed's decisions today. Okay, that just doesn't sound good. That sounds like a Fed that is taking in way too much opinions, or who knows, projections of what may or may not happen into policy actions today. That is not something the markets like to hear. And really, just think about what a lot of fund managers on Wall Street have said. Even just recently, they were saying, "Hey, we've cut a few times." But we're not even halfway there yet. Or even if we are halfway there yet, there's still going to be more cuts. And after today, Wall Street's saying, oh crap, is there going to be any more cuts? Is this the last cut for a long time? Considering inflation came in hotter than expected over the last 2 months. That, I think, is what is kind of driving some of the sell down, most of the sell down that we are seeing today. It's the realization that the Fed may be done cutting rates. So that Fed put may be gone until the economy weakens. Yeah, that's not good. Jerome Powell says higher inflation is probably the biggest factor for the new projections. That's not good. We want to see progress on inflation as we think about further cuts and a solid labor market. So basically saying if everything stays the same, you're not going to get any more cuts. And that's one of those quotes that kind of cause markets to freak out a bit. Jerome Powell says November inflation is back on track after higher readings. And he says that some people did take a very preliminary step and incorporated conditional effects of coming policies in their projections. Another quote here about Fed officials taking in, projected tariff policies into account today, right? It's like trying to forecast something that has not happened yet. It's very difficult to do so, and it raises the odds of a policy error. These are all things I did not expect the Fed to do. Again, as I said previously, the actual dot plot here was pretty much in line with expectations. There were some areas that were a little bit more hawkish than we were previously expected. Longer run neutral rate went higher. Yes, the Fed came in a little bit higher than the markets were expecting on that 3.9% rate by the end of 2025. But largely these things were as expected. I think a lot of this fear, though, is just the language that Powell is using. It sounds like the Fed is done cutting rates. Powell was even asked by Steve Eisman from CNBC that the recalibration, as the Fed used to kind of get policy closer to a neutral rate, if that's over, and what a new kind of term is going to be for this phase of the inflation fight that we are in. And Powell said, well, we are definitely in a new phase, but we're not going to name it. He said, eventually we may name it. So you are in a different environment from the Fed. Unless things change, you're not going to get any more rate cuts. Okay, the markets have been super excited because we've been getting rate cuts and the economy is strong. Now, if the economy is strong, we're not going to get any rate cuts. You have to see the economy weaken to get rate cuts. And the economy weakening is not good. Okay, so that is the big thing today. I think Powell really did not do a good job in the actual press conference in making this sound, bullish. Sometimes they come out with hawkish dot plots and sound really bullish on the commentary. No, I mean, the dot plot was in line with expectations and Powell just sounded hawkish. He sounded like they're worried about inflation. They're worried about tariffs and what that will do to the inflationary outlook. Now, one thing that I was hoping we would get commented on is what it would take for the Fed to raise rates. In fact, nobody asked Powell that question. I mean, Powell probably would have said that's not the base case and we're not expecting to do that. But I was surprised we didn't get that one actually asked. Now, what all of this means for markets, unfortunately, is something big did just change. My expectation was that nothing was really going to change, that the Fed was not going to, dramatically change their expectations around tariff policies. They really weren't going to factor that in until they knew more about what the tariff policies are actually going to be. No. The Fed, they completely changed their policy stance based on incoming tariff policies. I was dead wrong on that. I think this could be one of the greatest policy errors from the Fed in the last, couple of years. Over the next 6 to 12 months, we may realize that the Fed should not have changed their projections based on potential tariff policies. And the fact that things did change caught the markets by surprise, kind of like a gray swan event. Because nobody was expecting the Fed was going to jump to dramatic conclusions that inflation is probably not going to continue to make progress. That's essentially what the Fed said today, is tariffs are going to be an issue. They're going to cause inflation to stay higher. And I don't think the markets were expecting that. I was certainly not expecting that. And I don't think the markets were either. So with all that said, ladies and gentlemen, I think the markets are just caught off guards. This was a gray swan event. And when you have a weak market already, when you had the RSP, which had been dying, I mean, this is the equal weight S&P, when you've had the worst streak for advancers versus decliners on the S&P since the 70s, meaning that for now 13 days in a row, you've had more stocks declining than rising. And then you get hit with this, with a Powell that sounds like they're ready to raise rates, with a Powell that sounds like they're not going to be cutting rates anymore. This just shocked markets. And it also comes at a time in which we really didn't have puts. Like, Wall Street was not ready for a U-turn from the Fed. Like, the VIX was just recently at 12. Now today it's over 20. There's definitely a lot of fear that just got smashed into markets. And with this setup that we have, I find it very hard, for markets to rally into year end under these kind of, stipulations that Powell just put on markets. So unfortunately, it looks like the Fed canceled the Christmas rally. I was wrong. I was expecting we were going to get a kick the can down the road kind of Jerome Powell, but that did not happen. So let me know what you guys think about this information down below in the comment section. Have a fantastic rest of your day, however best you can, and I will see you in the next one.